this is now the time of correction. We've started. I think it's different than any other hard market we've hit because traditionally a hard market lasts 6 months, maybe a year. The auto market started going hard 6-7 years ago.
Hi, I'm Mark Gagan of The Voice of Insurance. The voice you just heard was the CEO of Prime Insurance, Rick Lindsey. Prime is a small, very fast-growing and very well-performing US Excess and Surplus, or E&S, insurance company. Prime now writes in all 50 US states. Now, everyone agrees that the US E&S market is one of the markets with the most interesting dynamics anywhere in the insurance world. In sharp contrast to a backdrop of global softness and overcapacity, in the past few years, some of its more stressed classes have seen consistent compound rate rises. These moves have been fascinating to me and other observers of the global wholesale, specialty and reinsurance markets, and that's why I was delighted to catch up with Rick in London. Rick has been in the US E&S market all his working life and knows everything there is to know about the ups and downs in this specialist field. And what's more, being an owner of part of his own balance sheet gives Rick a huge amount of credibility. Of course, he also has strong views and he doesn't pull any punches. And that's why I can highly recommend the interview that follows. Now, I started off by asking Rick to do a brief introduction of Prime Insurance for any listeners who are not familiar with the company. Enjoy the listen.
Prime was an original member of the Illinois Insurance Exchange, and in 1995, I went to Illinois and took over Prime as the manager, bought 5% of the company, and it was C-rated at the time. The Illinois Insurance Exchange was running into trouble at that point. Many of the syndicates had written property risks in Texas and Florida with the big storms. So states were kicking the exchange out based on, the syndicate problems. So when I took over Prime, it was probably at the worst possible
It was kind of subprime
time, yeah. And, the exchange was failing. I tried to save the exchange because I do believe in the subscription market, right? I think the Lloyd's marketplace where you have a lead and following syndicates to write and share risk is a great model when it's executed properly. When it's not executed properly, obviously it can go bad on you like anything. But, Prime was in, I think, 40, maybe 38 states. We got kicked out of a couple, Texas and Louisiana, when the exchange got into trouble. And then after an attempt to save the exchange, we worked out with the insurance department there to form Prime Insurance Company and merge the syndicate into Prime. And since then, we had RLI put capital in. They're one of my biggest shareholders at 24%. And in the last 5 years, we've grown from, 30, 50 million to 223 million we'll write this year. And that's, about 50% auto and 50% GL, professional, other liability. We do some property, but not a lot of property.
Does it tend to be the more stressed sort of property? Is it kind of coastal or that kind of stuff?
No. I would say right now the coastal property market is underpriced, and it's not something we're interested in because you can't have a happy customer at the end of the transaction, right? They don't want to buy flood, they don't want to buy wind, and then when the event happens, the lawyers are going to get involved, and, it's just a bad deal all the way around. So, one of my rules is I want happy customers, and I think the way that you keep happy customers is you don't compete with stupid and you don't insure stupid, because there's a lot of insureds out there who don't understand, the situation.
That's some pretty strong growth there, Rick, and probably it's a good way of bringing us into talking about the market. I mean, how much is that your own growth plans working out and the classes of business that you've been in expanding or just getting better rate, and how much of that is the market itself changing? It certainly sitting here in London, it seems it's very interesting the way that the E&S market has been developing, particularly in some of the more difficult auto classes. How fast? How much of that growth is down to the rate, and how much is down to your own business growth?
Yeah, I think the growth is a matter of the market. It has nothing to do with us, right? And that's what I tell my marketing people when they want to take credit for doing such a great job, right? We did a great job marketing before the market turned. But, one of the things I always tell investors or regulators mainly, because they want a business plan. And I always say, well, you tell me what my competition's going to do, and then I can tell you what I'm going to do. I don't believe in putting together business plans where you go out and you drive the market down, right? So we don't attack, we don't target business. We basically sit back and wait for people to run into trouble where they need a real insurance partner that wants a happy customer at the end of the day. And in many cases, that means we give them broader coverage, not more narrow coverage, but that means you get the right rate. You're not competing on price. So, we're growing now, and I've been told by many, a regulator and many rating agencies, that I'm growing too fast. And I basically told them I've been waiting 40 years for the right market. I'm not gonna slow down when it's the right time to be writing business.
So, by implication, there, what you're saying, this is definitely the right market. This is a good market. And how long is it since it's been this good?
Well, in 1985, there was an insurance crisis in the U.S., and, other people would say that there's been hard markets since then.
Of course, for historians, that's the time when, Marsh set up ACE and Excel on Bermuda to solve the liability crisis.
Right, yeah. So to me, that was the last crisis or the last hard market. There's been some, ups and downs and changes in the market, but to me, this is now the time of correction. We've started. I think it's different than any other hard market we've hit, because traditionally a hard market lasts 6 months, maybe a year. The auto market started going hard 6-7 years ago. That's when we wrote our first trucking account that we still write today in California. In fact, when I wrote it 6 years ago, it was on Lloyd's paper because I wasn't in California because I didn't have enough surplus. So we were one of the only Lloyd's cover holders that could issue auto in all, in the states you can issue auto on an E&S basis. And so, yeah, I'm happy that it's not a traditional hard market. That gives us time to digest and look at it. And I do believe that other lines, D&O, umbrella, GL, liquor, I think all of that is going to go through the same phase. And I think it's all driven by the legal system in the U.S.
So it's all about the social inflation trends that we've been reading a lot about. Is that what it is? It's all just chickens slowly coming home to roost.
Well, I think that as an industry, we've in a lot of ways caused our own problems because we fuel the fire by mismanaging claims, insuring the wrong people. And so, again, when you insure somebody's home in Florida and you let them underinsure, and then you don't give them flood and wind, you are setting yourself up for a shit show. Right? They're going to come suing, right? I have a place in Florida, and every time I go there, I get an ad for cheaper insurance, right? I can get cheaper insurance, but they're not offering me flood or wind. I got to get that separately. And every time I turn on the TV, the lawyers are saying, you got a problem with your homeowner's claim? Morgan & Morgan specifically advertises for, upset homeowners. So, we do some coastal, but very, very little. But we make sure we give them everything they need so that we can have a happy customer.
So would it be right to say that you run towards classes that are getting signs of distress rather than running away from them, but it means you can really select the risk and you can do the right coverage at what is going to be the right price and give the right levels of service, so you don't get into too much litigation, you can pay the claims properly.
Correct. Again, we do business with wholesalers, and when they submit us a risk, we tell them we need to talk to the insured. We do not quote a risk unless we talk to the insured. And that, to me, lays the proper foundation for a good relationship and to make sure that we all have an understanding of what the strategy is and what the expectations are and what the outcomes can be. I call it throwing quotes over the wall, right? I want to see the person that I'm going to be managing the claim with. I don't want to throw some quote over the wall and have the first time that we're ever, talking to each other is when you've had a claim.
That's great. One of the a very senior wholesale broker from the States, one of the last ones I spoke to, he described this kind of secular change that happens periodically in the excess and surplus lines market and its relationship that it has with the admitted lines market. He described it was the beginning of last spring. He described it as he calls it the dump. When the admitted lines market, after a prolonged period of soft market, has been writing for income perhaps more than results, and has been getting into specialty classes that it probably doesn't really understand, and retaining a lot more of that risk that might traditionally have been written in the excess and surplus lines market. And then now this is the point where they've had enough with that anymore, and they're going to stop doing that, and they're going to, as he described it, dump the risk back onto the excess and surplus lines market. Is that a fair description of what's been happening? Is there just a very large increase in the amount of submissions that the E&S market is getting? Would you agree with that?
I think in the auto market, definitely, right? So a lot of the auto, and we write auto in some states as an admitted carrier, but I would tell you that it's really E&S business, right? It's the trucks in that state that the admitted market doesn't think you can write, whether it's trash trucks because they're having trouble
hazardous materials, chemicals, that kind of
stuff. So, but I do think that, as a general rule, the admitted companies thought they were missing out on the E&S business. So most of them either bought an E&S company, or I would say the majority of them started an MGA where they've tried to get cover holder agreements. And I know some of them do have cover holder agreements over here. So, but I think it's a lot harder than they thought it would be to not only keep, underwriters and keep your MGA agreements in place, because that's really where I started, was as an MGA, nationwide programs. And, I knew I needed to get my own insurance company because I didn't want to be searching for new underwriters every 3 to 5 years all the time. That's a full-time job, right? If you're an MGA, keeping your markets happy and talking underwriters into, doing things the way that you as an expert in the field you see that you can make money, right? And they don't agree with you in most cases. They see it totally different. And then when the claims come in, you're arguing with the lawyers about how to manage the claims. So as an MGA, I was frustrated. And as an insurance company, I'm very happy.
Have you traded one lot of difficult people for another lot? What about your investors, or are they slightly different? Are they happy because you have to keep them happy financially? Is that
yeah,
so?
No, I mean, right now my reinsurers and investors are very happy. Obviously, if the numbers turn on us, they won't be so happy. But, again, I think that we've done this since 1979, and, we talked a little bit before about tort reform and whether tort reform in the U.S. will ever take hold. And when I was young and stupid, I believed in tort reform. I don't believe in tort reform. I don't believe it'll ever happen. I believe we have the greatest legal system in the world, right? And it's fair, but it's very expensive, meaning you have to be willing to spend money, right? And in the insurance business, we're trying to save money. And I think that's why we lose, right? When a small business buys insurance from an insurance company, and one of the examples I like to use with people is, let's pretend like there's no insurance, right? You get sued frivolously, right? How are you going to feel about that? Well, when you get sued frivolously and you buy insurance, they say stuff like, oh, we're not suing you, we're suing your insurance company. Well, they're suing you. Your insurance company is going to pay, and you're going to live with the results for the next 10 years or beyond. So, as an insurance company, we have the ability to do what as an MGA I couldn't do, right? So that's why I like being an insurance company.
I'd like to get back into some of those specific classes. So trucking, obviously, you're saying it's been hardening for 6-7 years. That's partly because of frequency and severity have also been increasing. People texting their spouses while they're sort of out on the highway and not looking where they're going and that kind of stuff. So when you run towards those kind of risks, what do you do? I mean, so do you just really start risk managing those risks on their behalf and get in with those trucking firms and the ones that are going to be better, or how do you approach the underwriting of those kind of risks?
Basically, we talk to every insured, and we get again an underwriting sense of what we think they would be as a partner, and if they've had claims from texting or I don't care what it is, an accountant that had a $4 million claim. My first question to them is, how are we going to prevent that from happening again? And let's come up with some ideas. On the trucking end, obviously everybody's doing stuff now that, they wish they would have done before. But all the telematics, all the cameras, there's still some people who don't want cameras. They, when you talk to them, they don't want them. And I say, so why don't you want them? And they say, well, it'll show when I do something wrong. It'll show when I'm at fault. And I actually tell them that's a good thing, right? You don't want to manage claims from a position that, you weren't wrong and then find out later it was your fault, right? So the sooner you know the facts of the case, the sooner you should be able to settle that claim. And so it's insured cooperation. It's the partnership with the insured, because at some point in the U.S. you're going to end up at war with a lawyer, and it's a partnership between the insured and the insurance company to come out whole or best at the end of the deal. The lawyers are obviously trying to drive a wedge between the insurance company and the insured, and they're able to do that quite successfully in most cases. And that's why everybody's afraid of bad faith. That's why everybody's afraid of spending money. The way you manage bad faith is you never leave your insured. Right? The only time that you get in trouble with an insured is when you abandon them and you've taken their money, and then they make you look stupid. So, number one, qualify people a little bit before you take their money and feel good that you have a chance. As an industry, I fear that we see everything going to the black box online, eliminate underwriters, and they think that some system they create is going to solve the problems. And I'm predicting right now that that's going to enhance the problems. It's going to make it worse. They're not going to get what they hope. I think you got to combine the people, the experience, and the expertise with technology. But the best technology we have is they can take pictures of the accident on their phone. They can do real simple things. It's not about a black box that's going to do it online, which is what I see everybody doing.
So we've got trucking. What are the classes now that you're seeing emerging distress in, and the sort of things that you're putting in your business plan to think, right, we're going to want to do some more of these?
Right. So I'd say the biggest increase in our business is a direct result of our competition. So Atlas is somebody who wrote a lot of non-emergency medical vehicles, a lot of taxi cabs. We've always done a lot of that. They've just run into trouble within the last 60 days, so we certainly expect to see more of that. The umbrella market, the D&O market, the GL market, the recreation market, all show signs of hardening, but for the most part, I try and look at it to try and understand what's going on the other side of the fence, right? I know what I would do, but in most cases, if somebody has a program for parasailing, they're going to try and keep that, right? Now, there's going to be pressure on them to get rid of it from, Lloyd's overseers or whoever's looking over it, reinsurers. But they're going to purge or get rid of the problem accounts first, and they're going to keep what they see as the good accounts. And, one of my reinsurers that writes trucking, I said, so how do you write trucking? And they said, oh, we write the trucks who aren't going to have a claim. And today you don't know which truck. There's certainly some that are going to have more claims, but even the best insureds today are going to have a claim. And you're going to have the legal system trying to leverage that to the best result possible. And as an industry, I think we've lost our way. We allow that legal system in the U.S. to leverage it to its maximum. And so when I hear, the stories over here in London, the casualty crisis and the frequency, and, I don't see all of that. I don't. I see that for 20 years as an industry, we've competed on price, and we really don't know how to manage claims anymore. What we do is we try and hire other people to do our job. So as a company, Prime, we do everything in-house: underwriting, claims, risk management.
Yep. You've got your own lawyers in-house, haven't you?
Right.
Yep.
And risk management people. We go visit each insured after. But it is, to me, about a partnership with an insured that's not naive, right? That you can have a good foundational relationship with. And then when you come under attack in the legal system that we live in the U.S., you have the ability to come out successfully, no matter the facts of the accident. Just don't let the system abuse you.
So we're in this upswing, which is good times for you guys, that you're able to get the price that you think probably more often than not, or more likely to start getting the sort of prices that you need to charge for the risk that you want. How long do you think this upswing is likely to last? Because obviously they never seem to last as long as hard markets never last as long as soft markets. Certainly in my experience. How long do you think you've got to sort of get some really good business on the books and to grow into this harder market?
Well, again, I think that most markets cycle, I'd say 6 months to a year. So this one started in the auto sector 5, 6, 7 years ago. I hope that it's going to continue for the next 10 years through each sector, each line, each class of business. I know there's plenty of capital in the market, right? Everybody's got plenty of capital. For the past 10, 15 years, they've been willing to lose. At this point, I see them saying, we're not going to lose money anymore. And I don't see that changing. There will be new money come in, which there always is. Even in a soft market, there were risk retention groups formed that competed directly with me. They're not around anymore. So part of being a good insurance company is you've got to be able to stand the test of time and wait for stupid competition to go away.
Right. And how long do you think we've got, though?
I think it's the next 10 years. I think it's just going to continue to escalate because the lawyers are winning. In the United States, the lawyers are winning. They have as much money to spend on TV advertising as the big insurance companies do. So to me, that's an indicator that, the legal problem in the U.S. is what drives all this. And people write property thinking it's short tail. It's not short tail anymore. The lawyers are coming after you now years after the event.
Yeah, that's a good observation, Rick. You're growing pretty fast. What are you projecting for 2020 as your GWP?
I mean, again, I would say that, we're probably going to continue to grow at the same pace we have for the last couple of years because I don't see the market getting softer yet. In fact, I think it's probably escalating a little. So depending on how much capital we raise in the new year, which is one of our plans, is to form a second company to provide additional capacity and ability to write more. But I would say we'll get close to $300 million, and it could possibly go above that. But that has more to do with the other markets than me, because I'm not going to go in and beat.
You're just doing more of the same.
Right.
Will you be increasing your headcount? Do you think you will be selling more policies and more insurance?
Oh yeah. No, I don't know how many people we added last year, but 40, and we're expanding offices in Chicago. We just expanded a big office, hired a bunch of people. We're opening up in Exton, PA, an office there. We have the office in Naples, Florida, and then Salt Lake City, Utah is where the majority of our employees are. But yeah, we'll continue to grow. And historically, since 1986, I've always been overstaffed, right? I don't think that that's an option. And obviously, as you have a team of people, some of them need to be purged and some new people need to be brought in. So it's always this evolution of trying to add good people to the team. And I can tell you in the last year we've added a lot of good people. I think that as our industry evolves, there's a lot of frustrated people out there that want the tools and the skills and the resources that allow them to leverage their expertise and occupation.
And how much is that down to the retrenchment of some of your competitors? Has that been good for you that you've been able to pick off a few people that you've had your eye on for a long time?
No, I haven't had my eye on anybody for a long time. I've met people over the course of time and brought them on board, and I hope to do the same. But it's just an evolutionary process. A lot of people are retiring; they're just getting the heck out. They're done. We could sell. But we could have sold for the last 10 years at different points. But again, I think that, our business is a marathon, not a sprint. And I think that that's, really the foundation of what we have. I've been doing the same thing. I'm not selling. I plan on being here for the next 20 years. And I do think, I've waited for this market for a long time, and I do think it's here, and I do think it'll be different than the past short cycles. I think we're actually maturing as an industry, and that might be because of the legal system in the U.S.
And so in terms of the support you've been getting from your reinsurers, we've just come through a 1/1 renewal. Have you been happy with the way that's come out? You've been able to, obviously you're targeting growth. Have you had the similar mentality from your supporting reinsurers, or because we know that some of them have had a slight change of heart, and that whole the market's change of heart has been global in many respects. How's the renewal been for you?
Well, I think like everything, when things are going good, our renewals were very easy. We have all kinds of people wanting to come on our renewal and join our model, and so Berkshire Hathaway is my lead, RLI, Transatlantic, XL, AXA, Catlin, however you refer to them now. I guess it's AXA, and we had a lot of other people that wanted to come on that I basically had to say no to, but I also am aware of the fact that if our results started to turn, they'd be jumping ship just as quick as they want to get on. So I've been doing this a long time, and when you perform, people want to do business with you. When you don't, they're going to jump ship and run.
Super. You're performing at the moment, so you've been posting a sub 80 combined ratio. I mean, how do you do that?
Well, I would say it's because we do our job, which is we work with our insureds on a partnership basis. And when you have, the unfortunate claim that happens, you can take a lot of different strategies and tacks on that, which obviously the legal system in the U.S. has their goals in mind. The plaintiffs' lawyers don't lack any exuberance for, doing what they think their job is. And so I can tell you, I think my job is to counterbalance the plaintiffs' lawyers. That's our industry's job, and I think we failed at it. So what I do to produce that result, and I'll give you one example, is a trucking company in Naples, Florida, had a big claim. Nobody would insure them, so I got them on the phone. I said, what happened? Oh, AIG paid this claim and they shouldn't have. I said, okay. So if that happens again, you're going to want to fight, right? Because I'm going to want to fight. That's what you're complaining about, is that AIG didn't fight and they should have. Yeah. So 8 months into the policy, his truck's driving down the road 60 miles an hour, gang of 9 motorcycles, 90 miles an hour, flies by him. One of them hits his truck, quadriplegic. So they sue, 2 years down the road. They're making a policy limit demand, and the insured's calling me with his lawyer telling me he wants to settle. And I said, so you remember the conversation we had where, this is a frivolous lawsuit. You didn't do anything wrong. We should fight this. But if you tell me to pay it, I'm going to go pay it because you're the boss. You're the insured, right? That's why, your claim last year went bad, is because you told AIG to settle it. It wasn't AIG. So anyway, after talking him off the cliff and talking him into, focus on the facts. This guy ran into your truck. You didn't do it. Within 3 months, the plaintiff's lawyer dropped the case with prejudice, never to be filed again. So I got rid of that case. We'd spent $40,000. We were ready to go to trial. 0 claim. Now I submit to you that people I know, if they would have written that claim, they would have hired a big law firm, or if they'd have written that insured and that claim came in, they'd have hired the biggest law firm in Florida. They'd have been scared to death because it's Florida, South Florida. They would have spent $200,000 on playing like they were going to defend it, and then they would have paid the limit of $1 million. So you're talking about an outcome of $1.2 million versus $40,000. So that's how Prime makes money.
And now that you're growing so fast, do you think there's a point at which do you ever lose touch with that way of doing business? Could you ever be a $2 billion insurer and still keep that philosophy?
I believe, yeah. I mean, I think that over the years I've met some very large insurance company presidents, and they ask me the same thing, right? They say, how do you do it? I say, I talk to every insured, have a relate, not me personally, but my people, my crew. This is a model where now my 42 underwriters do what I do and, call me in when needed. But, yeah, I'm going to continue to do that. And when I tell that to people, they all say, oh, we could never do that. And I always think, thank goodness. I'm glad you think you can't do that, because that'll keep our model unique. But I think that's what everybody in the insurance business should do. You shouldn't take people's money unless you really understand the job and are willing to do the hard work.
Rick, we're sitting here in London, which is great for me. It saves me coming out to Salt Lake City to find you over there, which is one of the good things about London. We're lucky that people pass through every now and again, maybe once a year or so we can grab people when they're here.
Right.
We're lucky in that respect. But what's been your relationship with the London market? And it's been through some re-underwriting, reappraisal of what it should be doing over the last 18 months. Certainly on, particularly in your market. How's that experience been, and what's your view in terms of some of the reforms that are going ahead in Lloyd's? Are you encouraged by some of that? Some of the stuff do you think that those are reforms that need to be done, make the place more efficient? Anyway, I'd just love to have your view, or as someone who's been probably coming to London and interacting with London for a very, very long time.
Right. Well, I mean, I have, a lot of good friends over here that have supported me since 1994. And, even before that, because they were on the reinsurance with Homestead, so they were familiar with us. But, I've been a cover holder, and really I used Lloyd's paper as an A-rated option, right? Because I wasn't A-rated, and I wasn't in all the states. And now that Prime is in all 50 states and I have my own ability to do it all, I really, prefer Lloyd's as a reinsurer. And so, I believe in the lead follow model. I think that's the way to provide capacity and spread the risk. And that's why I tried to save the Illinois Insurance Exchange back when I showed up there, because that was one of the problems with it, is they didn't share risk. They all operated like their own little insurance company, which, to be honest with you, is something I've seen over here more recently. As the bigger syndicates get bigger, they want 100% of everything, and they try and apply pressure. And I've successfully.
And then that gets you into trouble, I presume.
Yeah, because you're putting all your eggs in one basket. When people leave, people change. So to me, a stable of supporters is better than one big syndicate. So that's what I have, is a stable of supporters over here. Right now, I'm negotiating with Lloyd's syndicates to be able to do more business with them. Right now, it's just a reinsurance relationship. The cover holder agreement was, I think, expired about a year ago. And prior to that, I wasn't in California and New York. So, when I got in California and New York, then the Lloyd's paper and my A rating isn't really as valuable as it was before. And then, I would tell you that my frustrations with Lloyd's are they rely on lawyers too much, right? I mean, I rely on lawyers too, but I don't let them lead me, right? I'm the insurance guy. They're the lawyer. They're risk adverse, and I have to give them backbone when it makes a difference. And clients, insureds, tend to listen to lawyers like they listen to doctors, like they're the smartest guy in the room, which they may be, but they're not always the one with the best idea or the best result. So, I like the partnership with the insured. I think, that's the key foundation of having a good insurance relationship. I mean, I have very, very highly skilled people, mountain guides that take people to Mount Everest, right? I've insured for 35 years, and they could now get cheaper insurance, but they won't, because they understand the value of the partnership, and they understand I'm going to represent them like other people wouldn't when the chips are down. So, I think my hope is that I can continue to do business with my London partners, combining our resources so that we all benefit from it. But most importantly, we have happy insureds at the end of every transaction.
So you've got a more mature relationship, you say, with them now, because, you're an equal partner with them.
Right. Yeah. And, there's a bunch of great guys over here. The U.S. legal system is very, very, confusing and scary. But as I said earlier, I think it's the best system in the world. You just have to know the facts, and then you have to be willing to spend the money, which is really what, if an insured didn't have insurance, they would fight a lot of these frivolous lawsuits. But they couldn't afford to. They don't have the money. So, insurance companies have really become these settlement machines, when in many cases we should be fighting to set the future precedent, the same way that the plaintiffs are setting precedent with their cases. So to me, since in my 40-year career, I remember when my dad came home and it was big that, lawyers were going to start freely advertising now. And, at that point, probably didn't realize the effect of it now. But the effect of it today is that they're winning. The lawyers are winning. That's why severity's up, and accidents are up because there was marshlands there 20 years ago. Now there's a subdivision there, right? Now where there wasn't a stoplight, now there's 4 stoplights in that town. So yeah, there's going to be more accidents, right? That's just the nature of growth. But how efficiently are we managing claims and paying claims? That's our job, right? We're not supposed to overspend and overpay claims. That's not what our insureds, again, if you go back to pretend there was no insurance, insureds could do better. The business could do better on their own with no insurance in most cases when they get involved with a lawyer. So, and the best example of that is criminal cases in the U.S. You know how much it costs you if you got a felony in the U.S. to hire a lawyer? Guess what it is?
No idea.
I mean, most people think they need $1 million policy, right? If I got accused of a crime. You can get a defense for $25,000 of a felony. You know why? It's because there's no insurance. If you had insurance, the bill would go up to whatever the limit of the policy was. They would work their way up there. They'd make it as big a job as they can. So to some extent, as an insurance company, again, we settled the quadriplegic case on the truck case. I had another case with a physician that died backcountry skiing with us. And with one of my guides, I've insured for 35 years, world expert, world class. He never thought he would have a claim because he's the best, but even the best has a claim. And this gentleman from New York had skied with him many, many years and died, unfortunately, in an avalanche. And within 90 days, we settled that claim for $30,000. And I don't, number one, your insured has to report it to you and trust you, right? In most cases, most insureds don't trust their insurance company. They either don't report it because they figure they didn't do anything wrong, and then we get late notice. I knew about the accident within 5 minutes. We had our experts ready, we had our lawyers ready, but we're trying to settle the claim. We're not trying to spend money and protect ourselves. We're working with our insured to get to the end of the end of the road in the most efficient way. So, I think that outsourcing is at the root of most problems in our business. When you outsource, it sounds good, sounds cheap. I could run my company with a lot less people and a lot less money, but I think I would be losing money.
But it's looking at your expense ratios, they're not out of line anyway. So it's a false economy, is what you're saying.
Right. Well, and our model is such that we don't really give our pen away. Right. We work with wholesalers on a partnership basis, like I do my reinsurers. We give them access to our system so they can be free to operate. But doing it in-house and owning it, and if you have a partner, whether it's an outside lawyer or an outside MGA or risk management, it's a team effort, right? You're working on it together and you all see the same vision. And I remember back when I was 17, and US E&S was a big insurance company in the United States, and they were next to my dad's office. And they wrote the amusement park there in Utah, which always boggled my mind, right? That's an E&S type thing. But in the old days, US E&S was a big open office. They had underwriters in one line of chairs, risk managers in another, and claims guys in another. And before they wrote a risk, they all three went out and looked at it. Then when the claims came in, they all three had the same strategy and mindset. Today, we had a situation with Lloyd's where Lloyd's auditor came over and told me I couldn't attend the claims meetings anymore because I was the named underwriter. So there's this desire to separate claims from underwriting, because when you hire it out, now there's this chance that there's this conflict or manipulations that's going on. So you want a Chinese wall between the underwriters and the claims. Now, if you go read the bad faith lawyer's book on how to win a bad faith case, the one thing they tell is they say, just ask the underwriter and the claims guy if they ever talked. And when they say no, you got them. Right? How does the claims guy know what the intent was? Well, he's reading the policy. Well, you probably should have talked to the underwriter, right? So a lot of this, again, when you outsource stuff or you separate it, you lose the value, right? You think you're saving money, but you're really costing yourself more money.
But wasn't it true in those cases that was partly for the underwriter's own good, wasn't it, to separate so that they wouldn't get too involved in claims, that wasn't always seen as being a good thing? You're saying
I don't agree with that. Again, an underwriter has to see the claims coming, right? He has to be involved in that. And also, you don't want a claims guy. I mean, I remember when I used to write with Homestead, there was claims guy that I used to, allege that he impacted my results by 20%. I called it the Dewey factor because his name was Dewey. And he fought me on every claim, and it basically increased every claim on it. And that when I wanted to form my own insurance company, that was in my model. Look, we're producing this loss ratio now, and I know with the Dewey factor, I can do this much better. But why do you want a Dewey factor in there, right? Now, a lot of people would say, oh, you just want yes men around you. Believe me, in our business, you hear the negative from everybody, right? There's no lack of different opinions, and I hear them all and I listen to them all, but somebody has to be the decision maker. Somebody has to make the tough decision that with the insured, right? That's the thing about an insurance relationship is if I do what my insured wants, I can't be in bad faith, right? I sell you the policy you want, then I manage the claim the way you want. I might not agree with you. If you want me to pay some claim I don't want to pay, I'm going to go pay it. But I'm going to let you know that it's, you're not going to go tell these next insurance people that a claim was paid that you didn't want paid. Because that's the biggest lie all these people tell is, the insurance company shouldn't have paid it. Well, you told them to. You wrote them the letter. You gave them the settle letter. Yeah, but they don't have to settle if they don't want to. That's not true.
Well, it's been really, really interesting talking to Rick. I'm conscious that we've used up quite a lot of your time. I just wondered before we sign off if there's anything else that we haven't spoken about that you think we should talk about.
No, I'm glad to be back in London, and I think the next 10 years will be a good, exciting time for everybody in the business.
Well, I wish you all the best for everybody at Prime and all your partners here in London, and I hope to speak to you again, and maybe we'll put a date in the diary for the next time you're over to give us an update on what's happening, because it's been absolutely fascinating talking to you. So thank you so much. Thank you, Rick.
Thank you. Yeah, appreciate it.
You've been listening to the voiceofinsurance.com, produced by me, Mark Gagan. Original music was by Anna Gagan. Thanks for listening.